Hey traders, Niall here from learntotradethemarket.com. I'd like to welcome you to today's Forex price action trading video. In today's video, we're going to be talking about bullish reversal setups, trading with the trend, plotting levels, and trading in a swinging market. Now, the Australian dollar is obviously one of my favorite pairs. This strategy would apply to the euro dollar, the British pound, or any major currency pair. Now, I just wanted to point out a daily setup on the Australian dollar. Now, when I say daily setup, we're looking at daily time frames on the chart here. We're looking at the last few months of price data all the way back to August. In fact, I'm just going to draw the levels. This is what I always do. When I look at the daily chart, I zoom out for the last few months, draw some levels that are really obvious. Now, this one's obvious at 107.50. That's the resistance, the major resistance. There's another level here at 103.80. That's the short-term resistance. You can see the market's obviously struggling there. We've got a long-term support level around about that 95 region, and this was a false break of that level here, but we'll draw 93.80, 94, somewhere around there. So really we've got a sideways market overall, and the short-term trend is up at the moment within this broader range. Now, as you can see, the market is slightly upward biased. We will need to see a breakout of this 103.80 level if we are to test the 107.50. Now, the reason for the video update today, I've actually entered a long, and I'll tell you why. I'm just going to zoom in and point out the signal that I've taken. Now, for those of you familiar with my work, I look at PA only. I'm looking at a raw price chart here. You'll notice there's only levels and candlesticks or bars. I'm not looking at any indicators, nothing haphazard, nothing fancy, there's no magic here. Alright, I use my mind, my brain, and my trading plan to make all my trades. Now, there is never going to be the same pattern twice, but what you look for is something very similar, something that we call our edge. And that edge, for me, is when we see a reversal bar, a bullish reversal, a pin bar, a hammer bar, something like that. We can see we had one here, and that was when the 102 area was respected. The market broke out, then we retested this area and held. The market is now consolidated, and we are just chopping around under that 103.80 level. We've since seen a massive bullish reversal bar, pin bar reversal, just under that 103.80 level. We actually moved down to test that 102.20 region on Friday. Somewhere around there was the low. We rejected all the way into the close, and that signals to the world really that lower prices aren't acceptable. They want to take this market higher. When you see these tails, that's this thin part of the bar. When you see that tail, it signals bullish momentum. Obviously, if it's the other way around, it's bearish momentum. But because we're above this level at 102, the market tried to sell off down towards that support, and then they pushed it back up into the close. When I say they, I'm talking about the big boys, the banks. They've got in there, they've put their buy orders in the market, and they've come in with a bias into Friday afternoon. We want to buy it. So on Monday, naturally, the market is now trying to move higher. We did gap down. There was a little bit of bad news over the weekend about some downgrade. I don't really care. I don't look at fundamentals. But if you do look at the price action, you'll note that the market gapped down, and we are now moving higher. We also have a tail on that bar, so the lower prices are being rejected. Now, I'll just take it out again and show you what I'm looking for. I've entered today on a pullback. As that market gapped down, I got a nice entry around the halfway point of the signal bar. That's something I teach in my courses. I won't go into it here, but let's just say that I'm long and I'm looking to define my risk. The level really is that 102 or 102.20. So if we just draw a line under that low of Friday, for me that's a good enough area to define my risk. Somewhere in there. So if the market breaks down, I don't want to be long. I'll stop myself out of the position and look for the next trade. Now that I'm long, I will stay long until the market breaks back below that low of Friday, below support. Now, when you're trading, if you found your entry signal, you need to look for the most logical upward target. and because the recent highs are 103.80, that's where I'm looking for this market to go. I also need it to make sense in terms of risk reward. Now, I won't go into risk reward. Below this video on my website, I will post a link to a risk reward article I've done. It explains what it's all about. Very, very briefly, if I've risked around 50 to 60 points, I'm looking for a risk reward of 2, which will be 2 times my stop distance of 60. So 2 times 60 is 120. From the entry here, looking for 120 points. I should achieve that somewhere through here. And if I like the trade, I'll hold it for a little bit longer. It might take actually more than 5 days to get there because the market is grinding gradually. It's not in a very vicious uptrend. Let's say we get up here, I'll make around 3 or 4 to 1. That's assuming the trade goes well. I'm one of these people out there, there's only a few of them. I'm happy to discuss losing trades. This might turn around, disclaimer, it could actually stop me out, it could stop you out if you entered the trade. So just be mindful that trading does carry a risk. Of course, you do manage your risk correctly, losses are part of the game, and you'll see if you follow my commentary, sometimes I make good calls, sometimes I make bad calls, but hopefully in the long term there is an edge by following price action. All the banks and all the institutions are definitely looking at these kind of signals and these kind of charts. Now, I know personally several bank traders who follow daily charts only. I'm very much a high time frame trader. I only follow the 4-hour chart and the daily chart. There's a reason for that, is that if you were to look at a daily chart, it really factors in a full 24 hours of views around the world. So all the sessions around the world are factored into that daily bar, all the opinions and all the biases in all the prop desks, bank traders desks, everywhere that there is a trader, they've had an opinion and they've had the day to think about it. So I like to look at that daily close, believing that's the truest data possible. That's really all I've got today. I just wanted to point that signal out. As I said, not sure where it's going to go. Hopefully it does get up towards that 103.80 level and progresses through there. We're going to need to break out to get up towards that 107.50 level. I'll just quickly zoom out again and show you. That's the ultimate longer term swing up, is 107.50. It could take even another 15 days to get there, but if that low at 102 holds here, that's where I think it's going. That's all I've got for today. Obviously, if you'd like to learn more, you can check out the trading course and members area, the website link www.learntotradethemarket.com. Hope it helps. See you in the next video. Take care.